character, and then we'll get started. Oh, by the way, Happy New Year, everyone. Lord, one day is Thursday, January 16th, 2025, and this is the week in charts. Obviously, I want to thank all you guys and girls for attending. I appreciate you taking time out of your busy schedules to be here. So what are we talking about? Well, current market conditions, obviously, I have a lot to say about that, a plethora to say. Your questions on trading, you should be able to just fire away, and I'll catch up as time allows, and by the end of the webinar, we should catch up to everyone. Your favorite stock and crypto picks, you might want to hold off until we get the live charts on that so we don't overlook them. We'll do crypto, then we'll do stocks. And then I want to talk about the methodology in action, have a mystery chart update, actually a couple of those. Discretion, the TFM 10% update. And I did a live trade in the last week of charts way back in the middle of December. And I want to show you how that worked out. And then Q&A, of course. Feel free to ask your questions. So I woke up thinking a couple days ago, it's like I really need to dust off those resolutions that I did a few years back and start over for 2025. And I found some old presentations and I updated them for the most part. And I'm going to start working on that. But there's 25 of them, obviously, so it'll be a while. Actually, I'm going to have to come up with a few more. So if you guys have anything that you want me to cover or you think should be a resolution, I should say, please let me know. If you're watching this on YouTube, leave a comment below. There's disclaimer screen. As you know, you can lose money trading, or as I'll have to sum it up, all predictions are about the future. And a lot of stuff can happen between now and then. There's all my contact information. Feel free to take a screenshot of that, and it will be recorded and uploaded to YouTube on Friday if you're not watching live tonight. All right, let's talk about the mystery charts and the methodology in action. One question that I get fairly often is, why do we only risk 2% per trade? And a few people are like, 2% is a lot. Do you have to risk that much? And I'm like, no, absolutely not. And if you're newer to trading, and one thing I was talking about earlier in a webinar I did with Jeffrey Gibby over at Metastock earlier today in the Traders Forum, is that we're risking 2% per trade, and that's if you're stopped out on the trade, not 2% risk. And we were talking about how we scale out and everything else, and 2% is plenty. And the main thing we're talking about is that if you're newer to trading, risk less money, maybe risk 0.25% per trade, and then widen your stop out. That way, you're not losing as much, and you're, I wouldn't say guaranteed, but you're more likely to catch a few big winning trades. Anyway, so getting back to the 2%, this stock had gone mostly higher, mostly green for quite some time. This is SGMO, recommended last November. And you can see it pull back to the 30 EMA. Nice little Landry-like pullback there. There's all the parameters. And the entry was here, the stop was here, and the initial profit target. Oh, the slides aren't showing. Okay. Thank you. We did this last time, we being me. So I don't think anything, let me just back it out a little bit. Anyway, so on why we risk 2% per trade, you can see this stock began to take off. It had lots and lots of Landry-like for a long time, and then it pulled back. And there's all the parameters there. So the entry was here, stop was here, and the initial profit target was up here. And then, of course, if you're on the trading service, as you know, it did implode, unfortunately, and it had a 54% haircut overnight. Well, shit happens. You know. And sometimes I laugh and people are like, oh, how could you laugh? I lost money. It's like, well, I lost money too. So laugh to keep from crying. So what's the damage? Well, remember, we were only risking 2% on the trade. And when you add it all up, even though it was a 52% haircut, the stop was very wide in this particular case because that's what it called for. So we ended up with fewer shares. Yeah, it's 2,200 shares or whatever it was, but it's a lower price stock. So after all was said and done, we're down 2.62%. So a little bit more than that 2% number, but not enough to kill you, as the old hedge fund adage is, he who fights and runs away lives to fight another day. So yeah, it sucks, but you're going to be able to survive. And I'm not going to say that the most you ever lose is 2.6% on a trade, because you will get whacked every now and then. But the good news is the way the methodology works, as you probably know, if you've been following me for the last 20 something years, I hate to even add up how many years it's been. It's so scary. It just went by like that. But if you add it all up, where was I going with that? We only want to lose no more than 2% of trade. I can't guarantee you won't ever lose more than 2% or 2.62%. But the good news is we allow ourselves unlimited upside, and every now and then we catch a really, 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 really big winner, and it covers a lot of 2% or even 2.6% losses. So that outlier is definitely important. Now, I probably should have taken this out. Somebody, because it salted my wounds too, but somebody had pointed out, and this is what we talked about in the last week of charts way back last December, is that he puts in a standing order, and maybe for extended trade, and maybe these crazy issues like this, super high in volatility and low in price, that might not be a bad idea. I haven't done it just yet. I've done it quite a bit, as I said when I did this presentation a few weeks back. I do like to do this at IPOs, and I think that reasoning, because IPOs can be so volatile and take off and they come right back in, might be worthwhile for stocks like this. So I'm learning from my clients in the process, and I think that was a good idea. That's something that he does. Anyway, we talked about that in the last one. Now here's a Mr. Short reveal. This was HNST. It's been a while since we've done these presentations. You can see nice little pullback there, a double top knockout kind of set up. Double top knockouts where you have a minor double top and then the market pulls back. In this case, it wasn't a knockout move per se, but if you kind of use your mind's eye and put these 1, 2, 3, 4, 5 red bars together, like a weekly bar just on those 5 bars, it'd be like a nice little knockout type of move. And then it sold off a little harder, so that's a continuation of that knockout right here. But anyway, those were the parameters. Entry was here, stop was here, initial profit target was up here, and you can see that it didn't trigger, and then I took it off of the list. And we'll come back to this one in just 1 second. So no trigger, no trade, and that's something that I'll talk a lot about in a few minutes. Now, as I preach, discretion over the long run can really help out. And discretion is, it's not throwing caution to the wind, but in a case like this particular stock where the stop gets nicked by a few cents, especially if it's on a bit of like an opening gap reversal, then it's okay to stick with the position. Now, there's always a trade-off in trading, and that's why they call it trading. So you could say, well, Dave says this is a stop nick, so I'm going to stick with it, and the next day you could come in and the stock could actually implode on you, obviously. So that's a trade-off. Now, what you hope happens, I don't know, you got to be careful in trading, use the word hope, but what you hope happens is it bottoms out and then takes off again, and you're still along for the ride. So in this particular case, the stop was at 135. No, I'm sorry, wrong one. 455, and I think that stop actually moved higher. It was at 440 when this happened for some reason. So it was at 440. I don't know why I have 455 in here, but I want to say it was at 440, and it dipped right below it, and then it began to rally a little bit. Now this chart's 1 day old, but so far it's kind of bumping along those lows, and if it takes out those lows with vigor, then obviously I'm out of the trade. But it's not looking so hot so far. Okay, this is a crypto trade. I think I've talked about this a little while back, and as I say quite often, when you're trading crypto and the market's moving, which it hasn't really been moving that much lately, okay? But when it's moving, sometimes you could just buy them as they're making new highs, and that's what I did with this Ripple. And I think I've jinxed myself before with Ripple. I think you might have heard me say in this presentation I never made a dime in it, but I finally caught a decent winner here. The entry was here. Now in crypto, in the stocks, if you notice, next time we pull up the spreadsheet, or part of the spreadsheet, I should say, you'll notice there's a column off to the left, and that's the percentage of how far the stop is away. And one of you guys asked me to put that in a column, and I gladly did so, just so you can get a feel for the stops and how they vary with the price of the stock, and then the distance of how far away the stop is on a point value, how that changes a lot of times percentage wise. And if you're trading a low price volatile issue, that percentage might be 30% or even more. And I think that SGMO was like a 40% stop, which sounds ludicrous. But remember, you're adjusting your share size down accordingly, and that's a bit of an outlier as far as a stop that big. Rarely do you use a stop that huge. But anyway, in crypto, just to keep the math easy, because they often move so fast, I'll just use a 20% initial profit target. And this one hit it after a couple days, and then look what it did. It did absolutely nothing for a long, long, long time. And as I've said before, one thing that I've been doing kind of just for fun for S&Gs is when these shit coins, these altcoins, SHYT or altcoins, I trust them about as far as I can throw them, which I guess they could technically be on a USB drive, and I don't know how far I could throw that, but anyway, you get my drift. But what I do with them, if I make money off of them, I feel like Bitcoin is something that's a little bit more real, and a lot of people have trouble wrapping their head around it, but I think it's worth something as long as enough people agree it's worth something, and enough people right now agree that it's worth around $100,000 per Bitcoin. So I think it's becoming legit. I got to be careful not to listen to Michael Saylor too much and not to confuse the issue with facts. But what I've been doing for fun, as I've said 1,000 times, is I take a little bit off every time I make a profitable trade, and I put it in Bitcoin. And not a whole lot. I mean, years ago or a few years ago, whatever, I was doing a lot more pulling off, and now it's only like $25 in these trades. And these are I'm doing the altcoins with a very small account size. I got 3 small brokerages, and this is not my bread and butter, but they're a lot of fun to trade, and I think it's something that's worthwhile. And I'm getting more and more into the crypto over time. But anyway, 20% initial profit target, and I mine off, so to speak, a little bit of those profits and put them into Bitcoin. And one thing I got thinking about was, okay, what if you hit 100% profit target in these things? Now, there's 2 schools of thought. Let's say you just had a full position on, you didn't take profits. At 100%, you take off half, and then you've got a position that's 100% paid for. You've got a free position. What's the word I'm looking for? Outright. You have a free outright position. But what I'm doing instead is more like the core methodology, taking those partial profits and then bumping the stop to at least break even. And at 100%, it doesn't happen that often, but every now and then I'm peeling off a little bit more. I'm not scaling out in a major way, just such a small way that it's almost meaningless. But then that little crumb is going into Bitcoin. So this is my version of Bitcoin mining. It's my shitcoin to Bitcoin strategy that I'm working here. And it came fairly close. It hadn't quite hit that yet, but I do have a resting order in place. And sometimes they just spike right out really fast and come right back in. So you definitely want to have that resting limit order in place for your profit taken in Bitcoin. But you can see this is what I want to show you here. Notice that it just kind of died out forever, but that's okay. This is what I call not dead yet money, kind of a throwback to Monty Python. And if you watch these shows, you'll notice that I'll do a lot of dead money reports. Just because this thing goes sideways doesn't mean that I feel like I need to get out. I need to get out if I'm stopped out. And I like to see each position to its fruition. Now, this was back, again, middle of December, doing the last presentation. And we were doing the crypto analysis, as we'll do live here in a few minutes. And it just kind of jumped out at me. This was a new crypto pair, or whatever you call it, shitcoin, and it was beginning to take off, and it kind of reminiscent of an IPO that comes public, flattens out a little bit, and then begins to take off. And it had patterns for that too. But I liked the way it was moving higher, so I went ahead and put on a trade in the middle of the webinar. And fortunately, there's all the trades right there you can see. And I think I cleared about 100 bucks and change. Nothing to write home about. But I was able to mine off a tiny little piece. Once again, I've accumulated a tiny little piece of Bitcoin. Now, if that Bitcoin ever becomes something substantial, either through repeating this process over and over again, or Bitcoin goes to the moon or whatever, then I probably need to manage that position on more of a less of a hodl, hold on for dear life type of move. Now, in general, I don't believe in hodling, and I'm just kind of doing this little experiment for fun. And if I get a decent amount in Bitcoin, 6 figures or something, then by all means, I'll manage it as I would a trade. And remember, as I preach, and I said this earlier in the webinar today, all asset classes will lose at least 50% of their value at some point in your lifetime. It's kind of interesting. I think if I ever talked to Michael Saylor, I'd ask him about that, because he's a hodler. And it's kind of interesting that I think MicroStrategy, we can pull it up in a minute, actually lost half its value not that long ago. So I thought that was kind of interesting. But anyway, the entry was there. And again, we did it in the middle of the webinar. Go in and watch the webinar. It was Dave Landry's Week of Charts. And again, I think it was on 12/19. And the initial profit target was here. This little green line in the back, you can't see it, but it's right here. And then stopped out on the remainder. And then I put in here, normally I would mine off $25 to Bitcoin. And the reason I didn't do it in this particular case was I'd fat fingered an order a while back, and I bought more than I needed to. So every time that one of these trades comes through, I was like, okay, well, that's $25 towards that fat finger. Instead of erasing it, because it wasn't a whole lot of money, I said, well, let's just let it run and see what happens. And luckily, knock on wood, the Bitcoin has never gone below that fat finger level. Anyway, so that's the Bitcoin trade, crypto trading. Sometimes you can just buy the ones that are going up. I'm going to go through this quickly. These zone lines, again, are 50-week closing high based on that. So 0% would be right at the 50-week closing high. The green, which is a great zone, means you're within the 5% of the 50-week closing high. And then red means you're, what's that, light pink or whatever, means you're more than 5% away. And then, of course, if you get down in the hot pink zone, that's the danger zone, you're 10% away from the 50-week closing high. So there's the rules there. I've kind of beat the dead horse in the system, so we won't spend a lot of time doing this. But that was your last sell because you closed 10% below or more the 50-week closing high, and you also are below the 50-week moving average. Now, the buy side, again, a little bit more stringent. You need 2 bars of Landry light, and you go long. And this is a weekly chart, FYI. Really simple system, but it's become fairly popular. And some people who've been around a lot longer than me and know a lot more about market time than me have actually said this is as good as anything. And that's the thing about trend following. And I like my stuff, don't get me wrong, and I think my stuff is fantastic. But all representative methodologies look alike, okay, and act a lot alike. I think my money management, my stock selection, at least I hope, or the hybrid approach to the trading, the trend trading, longer term trend trading, and the money management along with that, and hopefully stock selection make my methodology a little bit superior to just kind of like a run-of-the-mill type of thing. But if you, especially like a mechanical system, they're all going to pretty much look and act the same. They're all going to have horrible drawdowns, and your accuracy is going to be low with a pure mechanical system like this in longer-term trend following. And that's why, and I know I beat the dead horse on the turtles, but that's why a lot of the turtles blew up after the fact. They were in the right place at the right time. They caught some fantastic trends. Not to take anything away from them, because I'm a little jealous. That'd have been a lot of fun, I would imagine. But a lot of them had a hard time repeating that performance afterwards. And as I've said before, and I didn't mean to go off this tangent, I always do, but as I said before, even the turtles themselves doing the project realized or whatever you call it, the experiment, they realized that they were risking too much, and Dennis actually shut them down, and then they throttled their risk way down because longer term trend following accuracy is abysmal and drawdowns are abysmal. But this particular trade, this last trade here worked out. So you would stop out, and this is actually should be a little bit lower. This sell would be right below this high peak zone. So normally the sell is 10% or more, or I should say normally the moving average is below the 10% line, but now the moving average has caught up. So the 10% line would be your sell signal. Okay. So if you're 10% or more away from the 50-week moving average based on where the P's are now, you want to get out. Now, this is kind of shocking to me. As ugly as the market seems and feels, we're still within that 5% zone. In fact, we're only about 2.5% away from all-time highs. So I find that fascinating. The breadth is bad, but we'll get to that in a second when we get to the market. But so far, so good on a weekly basis. Again, for S&Gs, as I said quite a bit, I took this NASDAQ trade. And here, actually the Qs, and here you can see the sell would actually be below the 50-week simple moving average. I guess like right there, you can see the moving average was above the 10% line, so you would have sold below the moving average. But now, or I should say below the 10% line, okay? But now the moving average hasn't caught up to the bottom of the zone just yet. And the moving average is just a whipsaw filter, as I've said 1,000 times, and I use a simple moving average because I actually want a little lag built into the system, just the opposite of what most people claim they do. So the sell would be below that 50-week moving average and below the zone. I was thinking when I went live, it's like, do I really need to cover this every week? And it's like, yeah, I think I should. So hopefully, and I just said hope, I know, but hopefully 5 years from now, I'm still showing this one trade and you could see the walkthrough for the entire period of time. So anyway, I'm kind of shocked, or as shocked as anyone, how well this worked so far. 61% move, 195 points, and it was just 100 shares. And when I put it on, it was kind of an S&G type of thing. And I had no idea it would make such a great run. So I'm pretty excited about this. But right around a little less than 20K on that move. The drawdowns have been pretty big. I don't have the drawdown chart on this week, but there was some $8,000 drawdowns, at least one $8,000, I think one $6,000 drawdown in the trade. And the reason I talked a lot about that is if you are going to be in that longer term trend following mode, you have to take the good with the bad. And yeah, 61% is beautiful. An extra 20K, who couldn't use that, right? Especially nowadays. But in the process, you have to be willing to give up a lot of that money. And that's just longer term trend following, like the hokey pokey. That's what it's all about. Landry 100, I rebooted this, I think back in July or June, maybe May. It was last summer sometime. And years ago, I tracked this list and the software was outdated or whatever. They stopped updating it or selling it. And it made it a little bit more difficult. And there was other reasons too. I think we went into like a extended choppy market, and it just was a pain in the ass to keep up with. But anyway, I rebooted it for S&Gs, which is kind of scary because could be a harbinger of a top when you start messing around with this extreme momentum type of stuff. And I'm just buying brand new highs. That's it. New 52-week highs. And if the market conditions continue to worsen, I might have to drop that new high down. I remember when I did it years ago, I think I was down to 90-day highs looking for new stocks. But right now I'm at 52-week highs, and I seem to be finding just about enough stocks to keep 100 in here. But they're all bought at brand new highs. And this is the RKLB, and this was bought on 9/25/24. By the way, I started publishing this to my Facebook group and the raw symbols, and also I have a direct link. I was not aware of this, but if you right-click on this, or just became aware of this, if you right-click on this, you can share the watch list to other people who have TC. So if you have TC, I can share it with you. And those in Facebook group, every so often I'll put it out in the group. But anyway, so on 9/25 is when I put it in the Landry list, and that was right on this breakout bar right there, if memory serves. And that's been a pretty good run. It's actually was 185%, and that's to where it was today. So this arrow should be like right there. Now I'm looking at it. This was 200% and change run, so that was very impressive. This APP has done really well too. You can see 240%. So there's a few triple digit gains in here. I took out one a couple days ago. I forget which one it was, but it was at 100% gain, and that was kind of cool. And there's zero money management in here. Now this is not real money. I did experiment with it a little bit. And one thing I found out doing this in real time is really hard to watch these stocks. And what's a killer is one will go up 30% one day and then down 30% the next day or 60% the next day. It's just absolutely crazy. Pretty easy to run this on a hypothetical basis. A couple times I've thought it'd be nice if I had an extra million around, just close my eyes or pace a body to run it for me. Maybe just give them the stocks like, here, take a look at these stocks. This is what I like to see go in if possible, and take out the other ones. But when momentum works, it's the most amazing thing in the world. The problem is, and I've tried to solve for this for years, and it's a bit of a holy grail hunt, is it ends badly, okay? And like I just said, on some of these, you're up 30% one day and then down 50% the next. But if you're going with a huge, broad portfolio like this, and a lot of these are really super speculative, but you're spreading that risk around, you're going to catch the occasional 100, 200, and beyond move. So I think the most I've seen so far was a 300% move. And believe me, there's a lot of stinkers. I took out one yesterday that was a 50% loss. So you do have a lot of stinkers along the way. One thing I've been thinking about, I think if you did this in real time, I'm wondering if you should take off, and you're selling winners, which goes a little bit against the grain of what you're supposed to do, but I'm wondering if you took off half when you're up 100%, if that would be a viable way of doing it. That way you've got a completely free outright position on the remainder. It's just something I'm thinking about. All right, let me check on my YouTube brethren, and then we'll shift gears here. All right, let's talk about 25 trading resolutions for 2025 and beyond. And I went back and I found this presentation from 2019. I updated a little bit, and I just found it fascinating. Some of the things I was talking about back then, of course, the same things I talk about now. And it was some really good stuff. So let's just get into it. One thing I want to think about or talk about before we get into it is that there's a homostasis, if I'm saying it correctly. But we reject big change, okay? And I've often given the example of some friends of ours, and we now find out if they're dieting before we visit them. And of course, they're dieting again, so we're going to probably back off on hanging out with them a little bit. They go on these crazy diets, usually around this time of year, and then they're no fun to be around. They're always crotchety and not drinking, and not that you need to drink to have fun, but with these people, they do. Anyway, so, and then we'll see them like 3 weeks later partying like rock stars with their other friends. It's like, well, how come we get the crotchety, peckish version, and their friends get the party version? But the point I'm trying to get to, and believe it or not, I have one, is we have a homostasis about us. And I guess I should have practiced that word before I went live, but I just thought of it in my head. And we can't take big change from a neurological standpoint. And that's one of the little secrets of trading. It's not a secret, is there's a neurology that's working against us. And that's something I get into quite often. And you just can't make a big change and say, okay, I'm going to make a big change and that's it. I'm going to diet, I'm going to exercise, I'm going to do all these things. but you can make a small change, okay? And that's kind of where I'm headed with these million little things that I've been talking about and these resolutions, which sort of dovetails in with them. So you're not gonna. It's so funny. The New Year's Eve crowd, or the New Year's crowd, I should say, in the gym has already dissipated, and I guess they went home and got all sore and everything, and realized that this sucks, you know. But I'd be willing to bet if they just would have driven to the gym and done some very small amount of weight, just almost go through the motions of all the exercises and do that every day, I'd be willing to bet they wouldn't have given up so quickly. So the point I'm trying to get to is if you want to make a big change in your life, and I'm not sure who said this, but it's in one of the articles that I wrote on my website, one of the random thoughts. But if you want to make a big change, make a small change, okay? And just do little things, and that's how you're going to get much better as a trader. So anyway, I kind of went off the rails there, but number one, I will only take trades when conditions are conducive to my methodology. And when I was thinking about whether or not I wanted to do this resolutions series for 2025, the first thing I saw when I saw this one here, I'm like, aha, yes, I'm going to do this because right now is one of those times where conditions are not conducive to trend following. And people ask me all the time, well, Dave, what do you do when the market's not trending? Nothing, just bide your time. And I have been guilty of doing some S&G trading on the side and some other things. And of course, I'm looking at crypto and all those other markets. But for the most part, do nothing. Don't shift gears and try another methodology and try reverse to the mean and whatever else. Just stick to your methodology and just know when to sit in your hands. Now, you don't want to trade when conditions are conducive unless you think you have the mother of all setups. So if I saw the mother of all setups tomorrow, today I didn't recommend any setups for my clients, but tomorrow if I saw the mother of all setups, even though the market's choppy and questionable at best, I would take it. Okay, and if you think you have a stock that's decent looking that could trade in lieu of conditions, or maybe a special, maybe it doesn't quite fit exactly into one of the weaker sectors, and you think it could trade higher in spite of the overall market, then by all means take it. Now there's some cases, and hopefully we don't get too far into this, hopefully the market comes back enough, but there might be some cases where a market is making a transition. So right now that transition would be from the longer term uptrend to a downtrend, and even though the market's still at fairly high levels, you might see something that looks really good. 2000, I know I've kind of beat the dead horse on this, but 2007, I remember in October, I couldn't find a long to save my life, and I had a plethora of shorts I were setting up, and I started recommending shorts, even though the market was making all-time highs, and I would apologize to my clients every time I put on another short. Well, we all know what happened after that, and it was kind of cool to ride that wave down. So the exception again would be if you think you have the mother of all setups, and of course if you're trading some sort of transition. So here's the P's, and this is when I recommended HNST. So the market is just I almost said something inappropriate, a very small amount. My sailboat racing days, they get a little raunchy on the boat, but a very small amount. Some of you may know what I almost said, but you can see it's very close to all-time highs. The market, for the most part, looks like it's headed higher, so I recommended along there. And then I just look at the records, and I recommended along in NBIS a few days later. Now let's take a look at the market. You can see that the market right afterwards sold off hard, snapped back, sold off, rallied, dropped, and then snapped back again. And now we might be going back to one of those rollover modes. So it's been all over the place. And once the market starts doing that all over the place electrocardiogram thing, you need to make sure you're drawing your sideways arrows going back in time, okay? And take a look at that net price change. Where's the market now? Where was it a week ago, a month ago, 2 months ago, and then so on and so forth. So this is not a condition that's conducive for trading, at least now. It was back in mid-December. It is no longer, for a trend trader at least. Now, during this entire period of time, I didn't recommend any trades in my trading service. The database wasn't producing anything that looked exciting, and the market was all over the place. So it's like, you know what? Let's just listen to the database and let things shake out a bit. Now here's that HNST trade again, and you can see it pulled back, and one of the resolutions is to wait for an entry, obviously. And again, you can see it just kind of sold off and got kind of ugly, but luckily it didn't trigger. So here's a case where no capital is put in harm's way. So through all that mess that we just went through in the market, from the new highs to where we are now, all that electrocardiogram, no capital was put in harm's way with new positions, other than the NBIS was the only one that triggered. Okay, so that's the only thing we have left in the portfolio now. And here's the NBIS. You can see it took off nicely, and the entry was 32.25, protector stop 23.25, IPT 41.25, and very wide stop in this particular one. That's what it called for. Now, when you look at the chart, that stop doesn't really look that far away from the price, but it's 8 points away or 9 points, whatever the case was. And the IPT, I don't know if you can see it, is up here off the charts, literally, or for some reason, people have become British lately. It drives my wife nuts, which is a short trip. That's another story. She doesn't watch these, so I should be okay. She knows I give her a hard time, make fun of her. Literally, as these people say nowadays. I don't know why they do that. But anyway, you can see it took off nicely out of the pullback. We triggered in, hadn't quite hit that IPT just yet. Now, one reason I did want to show you the IPO is IPOs could be an exception to the overall market. And I find that when the market gets iffy like this, and that's probably why that Landry 100 is still doing okay, I'd say okay, because it did get extremely creamed a few days ago, like whacked like crazy. And again, that's what happens with momentum sometimes. But the super speculative stocks and something like an IPO, which is also speculative, obviously, can sometimes do really well. It's like people are holding back on, I'll just pull stock out the air, the Teslas or Nvidias or whatever, the big cap stocks that everybody loves, the darlings. They're afraid to put that capital in harm's way, but it's like they seem to have no problem frittering away a little money into some of these more super speculative issues. Anyway, number 2, I will carefully plan all trades ahead of time and then work diligently to follow that plan. Plan thy trade and trade thy plan. Now, as I've said ad nauseum, you have to limit the amount of decisions you make when you're trading. When you're trading or doing any other thing that requires decisions, you are using emotions. I got into a heated debate with somebody a while back on this, and it's neurology, and I wasn't going to back down because it's neurology. And if she would just study a little neurology, she would understand where I'm coming from. And she claimed that she could make decisions without emotions. Well, if you lose the emotional part of your brain, you would either die or have to be institutionalized, because nothing would have an emotion attached to it and you could not function as a human being. But before getting too far into that, the point I'm making here is that, and believe it or not, I have one, is that the more decisions you make, the harder your life will become as a trader, and maybe harder your life in general. So if you don't, and I've shown decision trees before, a binary decision tree or whatever, where if you don't make this decision, then you're left with 2 other decisions and sometimes 3 other decisions. I don't know if there's a such thing as a trinary tree, but let's say you miss a stock and it takes off. Do you take the trade? Do you not take the trade? And then 100 other possible decisions. Well, maybe you take the trade at smaller sizes. Where do you trigger in? Do you just jump in? And before you know it, you're in a lot of trouble. But anyway, these are just some random things, and that's what a lot of the emails look like. Hey, I didn't get this one. I see it's already up 50%. Should I still take the trade? It's like, well, I don't know. When I picked the stock, I liked it. Everything was all the ducks were in a row, or planets were in a line, however you want to look at it. When the planets, I think, are going to be in a line really soon. I have to start watching for that. Anybody know anything about the astrological event coming up here soon? I wonder if that's going to have any effect on the markets. That'll be kind of fun to see. I know it sounds silly, but I think what they do is something will happen and something happens in the market and somehow they make a false correlation. But I think it'd be fun to watch. But anyway, I didn't take partial profits and now it's coming back in. What do I do? You get the idea. It's so much easier if you would have just followed the plan and if you would have planned the trade to begin with, obviously. So here's the NBIS was 222 shares based on a hypothetical 100K account, although I do take these actual trades. And the entry was here. You can see the entry down here, 32.25. The stop was down here, okay, 23.25. And then the IPT was right up here at 41.25. That's the complete. And if you want a blank copy of the spreadsheet, I can get you one. I think there's I don't know if it's behind a firewall or not. If you're a member, you have access to the members resources. You have a blank sheet. And all you have to put in is your account size, and you have to figure out your entry and your stop, and then it does the shares for you, the risk, and then the initial profit target. So these are the two you have to focus on, entry and the stop. And I was asked earlier about where's your entry. Your entry is going to be, you want to give the stock quite a bit of wiggle room, okay, on your entry, and that's to avoid being triggered in on noise alone. And then again, as I've been preaching throughout this presentation, your stops need to be fairly loose and you adjust accordingly. And again, the spreadsheet will do it for you based on the amount that you're risking for a 2% risk. Now, as I often say, trading done properly can be quite boring. If you are following the plan, a lot of times there is nothing to do. Do nothing unless there is something to do. And I think it was Ken Lambert that said, doing nothing is much harder than it looks. And that's especially true if you are successful. And who's most attractive to trading? Well, usually it's the most successful people, and it's something I've been writing a lot about lately. Is like there's a transference of knowledge. At least they perceive transference of knowledge. It's like, well, I'm the surgeon, so trading can't be hard. I'm just start trading tomorrow. They forget that it took them a long time to become a surgeon. And the other example I use is a plumber. It takes many years to become a plumber. But there is a defined career path. In trading, there is no defined career path. But anyway, following a plan is going to make your life more boring as a trader, but longer term, your quality of life will go up. And the biggest thing in trading is avoiding regrets, minimizing the number of decisions you make. And the best way to do that is to avoid putting yourself into a state of regret by following the well-thought plan. And again, as I've done presentations, like I said before, where if you don't follow your plan, then you're left with 2 or 3 other options, and then each of those options branch out, and before you know it, you could get into a lot of trouble really quickly. All right, number 3, I will only take trades that trigger an entry. Stanley D once said, Mr. Druckenmiller, I couldn't find a picture of him purchased or not. I purchased my clip art through, I think it's Dreamtime or something like that. Anyway, so I didn't want to use something that was copyrighted, so I just drew Mr. Stanley D. The way to build long-term returns is through preservation of capital and home runs. And you're waiting for an entry, and of course, then you're following the plan. And waiting for the entry can really keep you out of trouble. Again, getting back to this HNST, you could see the stock just kind of failed miserably, but it never triggered. And as I've said ad nauseum, I guarantee you, well, I can't guarantee, I can almost guarantee you that 3 months from now, somebody's going to email me on HNST. It's going to be $1 a share. And they're like, hey, what do I do with that turd you recommended? I'm like, I don't think I recommended that. It's going straight down for 6 months. It's like, yes, you did. And I was like, oh, yeah, okay, I sure did. But it never triggered. So no capital gets put into harm's way. Number 4, I will pick the best and leave the rest. So if the stock looks like an electrocardiogram, then you don't want to trade it. And it's kind of amazing on Twitter or X now. There's somebody that's interested in my methodology, and you can tell he's trying to learn it. It's exciting to help him out. But a lot of the charts that he's pulling up are just electrocardiograms, and so he needs to focus on a setup that'll stick out like a sore thumb. That's just like a perfect little trend, acceleration, persistency, and all these things that I preach every week. And I'm going to get to why people do that in 1 second. So here's the NBIS, and the big blue arrow was pointing higher. It was accelerating higher. It was persisting higher. And by the way, one thing I was just thinking about is like, well, Dave, you're kind of beating a dead horse in this one winner. But if you go in and look at the losing stocks that I picked, they all had a lot of these characteristics. They just didn't work out, okay? And this one hasn't hit the IPT yet, so let's not consider just yet. But this is what I saw at the time, and things change, right? All predictions about the future, and a lot of stuff can happen between now and then. But anyway, nice persistency, and then a fairly orderly pullback. And that was so far so good. So these are from 2019, and these are pretty cool looking stocks. And you can see big blue arrows pointing higher here. You had a gap in the trend when it began to take off. It accelerated higher, which is a good thing. And it's also has some persistency in the moves, meaning that it tends to go up bar after bar. So that was a pretty good looking setup there. Here's another one, PLMR, going back a few years, kind of a double top knockout look to it. Big blue arrow. For the most part, it's worked its way higher over a long time. And it had a bit of a slow start, but then it began to accelerate higher and then began to persist higher. And as a general statement, it tends to trade cleanly. Yet another TKO. This is a really good looking one here. Again, what do we have? We have the big blue arrow. And before that, it was kind of all over the place. It had worked its way higher, but then it began to accelerate higher and persist higher. And all these great things that I talk about. And you had a nice TKO bar to the downside. Now, I'm often asked, it's like, well, Dave, this stock used to be wide and loose. Why do you like it? Well, because it kind of got its act together. You can see in more recent times, it's accelerated higher very nicely. And by the way, you want a stock that's doing this, not doing that, okay? It is acceleration. Like sometimes you'll have a stock that'll go straight up and then it'll kind of roll over a little bit and set up as a pullback. You don't want that. You want that accelerating higher, kind of like the parabolic looking curve to it. But notice back here, it was kind of wide and loose and kind of all over the place. And people are saying, well, Dave, why would you recommend this stock? Because it used to be wide and loose. Well, unless you have a mountain of overhead supply and the stock begins to get its act together, keep in mind that the personalities change in this stock. A lot of people probably got washed out during that wide and loose base, tax loss selling, God forbid, death, okay, divorce, or who knows what else. People buy and sell stocks for a variety of reasons. Remember that. So it wasn't great back then, but then it began to improve. Here's an IPO, nice little TKO move within a pullback, and nice little trend higher. That arrow should be blue. Nice little gap higher too. So this is a stock that looks like it's going places. And it was an IPO. And it was also coming up at all-time highs. I'm a big fan of IPOs making all-time highs, like the NBIS did earlier today. Anyway, notice that it kind of came public. It wasn't great, but IPOs sometimes come public and go and bottom out. I don't consider that necessarily a bad thing. You don't want to rush out and buy them while they're bottoming out. I think that's a bad idea, unless they bottom out for a long, long, long time. You get something like a bow tie. And then it became much, much, much better and a nice trend higher. And again, here's another one, fairly new issue, big blue arrow. All-time highs here. Now, one thing that I think is a good idea is when in doubt, take the chart out. So draw your lines, draw your arrows, and then drop the chart out. And you can see that looks like a big cup and handle with a pullback on the right side, obviously. So that's one little trick. Steve Burns, I think. God, I hope that's his name. I had it right before I went live. But he posted this on New Traders, Rich Traders. He posted this either on Twitter or X on his Facebook group. And I thought it was kind of cool. It's like successful trading is waiting and then entries and exits. So I thought that was kind of cool. And that's what trading like the hokey pokey is all about. Now, Tom Petty, which this slide, he's behind the slide. Just imagine he's saying the waiting is the hardest part, as he's sung before. And believe me, it is. Now, it's three forms of patience: the patience to wait for your pitch, the patience to wait for a setup to trigger, and the patience to wait for a position to move. So let's break those down. The patience to wait for your pitch is to let that market come to you. And I've done this presentation 1,000 times, but it's so good, and I didn't realize it was in these slides until earlier today when I was assembling them or finishing them up, whatever. And I often would ask in a webinar, like, how come this doctor who's a really good doctor, or this businessman who's a really good businessman, or this automatic transmission mechanic that's really good at what he does, or lawyer, why do these same people who strive for such perfection in their careers, and I'm guessing their life too, settle for such mediocrity in markets? One guy's a very successful doctor. He also invests in real estate, and he does amazingly well. He's not just buying crappy real estate. He's super selective, buying these homes that are on exclusive golf courses, and he makes a lot of money doing it through good economy and bad. So somehow, but very, very, very selective. And I was like, well, why would this guy take a mediocre trade? Or why do people who are very successful in life take such mediocre trades? And I asked this question just hypothetically, and what would the world be without hypothetical questions? Said Mr. Wright, Stephen Wright, I think. And one day I got this fantastic email from one of my clients. I think I can answer the question about why highly trained and skilled professionals can't seem to get the chart reading / trading thing. I am a physician who specializes in psychiatry. Doctors, lawyers, and mechanics are trained to take whatever train wreck comes along. We're expected to do something immediately, regardless of the conditions and despite the negative outcomes of our action. One of my doctor friends who's also a client, he's like, this is what I'm facing today. And he had to operate on this woman's leg, which was black and swollen and nasty. And it's like, if I start to describe it, I'll start to gag, but it was bad. Okay. And if he starts cutting on this woman's leg, cutting off all this infection and everything, there's a really good chance it's going to spread. And there's a really good chance she's going to lose a leg and possibly more, okay? If he does nothing, it's all but guaranteed she'd lose a leg and likely she would die. So it's damned if he does and damned if he doesn't, but he had to do something. So, and I never heard back, but I'm guessing he saved her life, because he'd have told me if he didn't. It's pretty humble. It's like, doctors save life. They don't brag much about that. Anyway, as a physician, if you dwell too much on the potential negative outcomes, you will become a deer in the headlights and not be able to function. So we tend to minimize the negative aspects of situations. Amen. If I cut on this woman's leg, she could lose a leg. She could lose a life. But if I don't, she will die. I must operate on this woman. So waiting for the perfect pitch is not what we are trained to do. And the better the doctor, the lawyer, or automatic transmission mechanic you are, the more you have to take whatever train wreck comes along, and the more training you have to take these train wrecks. We have no training to prepare us for sitting on our hands and waiting. It is simply not part of the mindset. Dr. J. Amen, my sister from another mister. So the other thing would be patience to wait for a setup to trigger. So this one triggered fairly quickly, but day 1, day 2, day 3, day 4, and then finally it triggers. Now I think this might have been one of these stocks, and thank God I had the Facebook group, because one of these stocks I came in every day and I put my order in, nothing happened. I put my order in, nothing happened. Put my order in, nothing happened. And then one day I didn't bother, and I wasn't even watching it because I'm thinking this thing's never going to trigger. And somebody in the Facebook group pointed out that it just triggered. And I'm like, oh crap. And I just knew I'd get to my charts and it'd be up 3 or 4 points. Luckily, it wasn't up too much from the entry, so I went ahead and took the trade. But I could have easily missed that trade, and it did turn into a pretty big winner. And this might have been the one, I don't know. But it was a buy on this day as a TKO, and then no trigger, no trigger, no trigger, no trigger, no trigger, no trigger, no trigger. And it just kind of bored you to death by chopping along. And then what happened? Bam, went up 60% in one day. So there's a lot of patience when it comes to trading. And then, of course, the patience to wait for a position to move. And this was a gold stock we got in back in 2019. And this thing triggered and just died out, but it went sideways. It didn't stop us out. So stick with the position as long as it moves in your as long as it moves in your favor, but as long as you're not stopped out, even if it's an extended sideways move. As I preach, you want perfection going into the trade. And that's why, again, all these decisions after the trigger, when people email me, that it's a whole different ball of wax at that point in time. You know everything going into the trade. You know that it's a perfect setup per your methodology. I mean, you've got acceleration, persistency, nice little textbook TKO here. Everything is there. But as soon as you step into the trade, you're stepping into the unknown. And that's a whole another psychological lesson that I've done quite often about everything's known. And then you have to be willing to step into the unknown as soon as you trigger in. But the way I look at it is, and I told somebody this once and it kind of clicked with them, in for a penny, in for a pound. Do not exit a trade unless you're stopped out. And there have been many, but there's been a few that I can remember, at least one, where the stock got bought out after this sideways kind of crap like this. And of course, I would say most of the clients probably missed out because it bored them to death and they got out of the way. And by the way, I don't want to come across like I'm perfect, but I will tell you this: having that trading service and me putting my plan out there for the world to see, or whoever's paying for it at least. And if you're not paying for it, may you nothing. I'm not going to say it. But anyway, by doing that, it forces me to follow my own plan. So I had a mic drop moment a while back. This was probably 5 years ago, I guess. Trading is so effing easy when I wait for the best setups, take them, and then follow my trading plan. I think I might write that down. All right, let's change gears and shift into crypto, and then we'll hop into stocks shortly thereafter. So if there's any crypto pairs you guys want me to look at, feel free to punch them in now, and we'll get this up and running here real quick. Just bear with me 1 second. It takes a second to do the transition. How's everybody doing on YouTube over there? Okay. So here's crypto. Again, the only thing I have left is this XRP, and this is 100% profit target. Take a look at Bitcoin. Bitcoin is stuck in a sideways range, okay, for now, although it's improving a little bit. One thing I did like about Bitcoin was I like the way that it based, and I like the way that it faked out below that base and then came back into the base. Now, I wouldn't rush out and trade this pattern, but I have noticed, and I'd be willing to bet it would test out. If you look for a base, especially at a high level base like this, and you look for kind of a knockout move out of that base, and then you buy the breakout, I'd be willing to bet those will work a lot better than just trying to buy a breakout. So I think after this little fake out below, a little shakeout, I mean, that's a pretty big shakeout down to an 80,000 handle when you were right about 100,000, and a lot of people at 100,000 thinking that would be above 100,000 forever, but it's like, no, let's just shake them out a little bit is what the market is thinking, right? But a nice little shakeout move. We're back to the stuck in the sideways range. And again, as I said ad nauseum, sometimes when the crypto is really moving, you just go in and buy the ones making new high. Onyx coin. Let's see, that looks kind of interesting. So let's make that the trade this week. Okay. Now, you don't want to rush out and do this in something other than in the altcoins. Okay. So let's do this real quick. Let's go ahead and buy some of that. Now it's a little crazy to be buying something that's up so much, and it's, of course, it's dangerous, but it looks good, and we're not doing huge amounts. All right, let's see if we can get the buy in here, and I'll give you my fill. Oh, come on, there's too many windows, too many windows, too many windows. If I could figure it out. Oops. Oh, come on. Oh, here we go. If I can get it. By the time I get it, it's gonna be too late, right? All right, I'm gonna buy within the market, and let's see. Here we go, finally. All right, so my fill is 0.00546. So let's put a line there. Looks like I've traded this one before. 0.00546, right about there. Now, what's that times 1.2? What did I say? 0.00? 0.00546 times 1.2 equals 0.00, let's just say 0.0066. So what I'm going to do now is I'm going to go ahead and sell half of it at a limit order limit price of 0.0066. Okay. And does that sound right? That doesn't sound right. That doesn't sound right. 0.00546, 0.0546 times 1.2. I know I'm boring the hell out of you, I'm sorry. Well, I'll just put it in as 0.0066. Some math that's off somewhere. 0.0066. I'll fix it later. But anyway, right now I have it. It's 0.0066. And so it'll be right there. Okay. So if it gets there, I'll sell half at a 20% profit. We'll see what happens. So a lot of these are wide and loose. A lot of these are below the, that looks pretty good too. A lot of these are below the 50-day simple moving average, HBAR. I could buy some of that too. Let me see if I can do that quickly. So I don't want to make it look like it's just kind of like a willy-nilly, but sometimes when these things are moving, you just buy them as they're making new highs, okay? And I'm just waiting for this thing to catch up. But see, this is breaking out to all-time highs. It looks pretty good. Let's see. Did it ever catch up? Buy the market, and let's go in. All right, so I got filled on this one at 0.3927. So I'll just put that in here. All right, I'm not going to bore you with any more of this, I promise, but just a couple of breaking out look pretty kind of decent. See this one, it's all over the place. It's got wide tails, so nothing to do there. And ideally, you know, I probably shouldn't be as willy-nilly as I just was with that, but sometimes sometimes you see these things at a webinar and it looks so damn good, you hate to pass on them. Those are the fills coming in. But Ideally, what you want to see is not just a few of these running like this, okay? You want to go in when there's a lot of them all headed higher. So you want to go in when there's like bull market happening in the altcoins, which does happen fairly quickly. Let me just put a flag on this one so I remember that I'm in it. I've already forgotten the other one I just bought. Oh, H bar. Anybody know what these things do? I have no idea. All right, so we'll see what happens in those. Okay, any individual pairs you guys want to look at or anything? Let's go back to the Bitcoin. And somebody was asking me about what other coins other than Bitcoin, and there's none that are really, not that I want to confuse the issue with facts, but there's none that I think are viable. Okay, doesn't mean I won't trade them, but like I think as Sailor said, Bitcoin is kind of like the gold standard, and everything else is an application, as opposed to Bitcoin is more like digital gold and the rest of them or apps. Okay, that's his view of the market. But anyway, Ethereum, as you can see, just kind of all over the place, not looking fantastic. And if you take a look at Ethereum and Bitcoin, you can see that Bitcoin's been really outperforming. That H bar is taking off. That's looking pretty good. There we go. Nope. Come on, you could do it. Oh, look at that. See, look, already losing on trade. So see, don't follow me. Ethereum to Bitcoin, you can see has just been abysmal. Okay. So, and again, you could use that 30 EMA. That's one of your best friends when it comes to trading. Don't buy markets that are below the 30 EMA. All right, no, any individual, let me just check on YouTube. Any individual pairs you guys want me to look at, be happy to do so. All right, if not, let's shift gears and get into stocks. And if you have any individual stocks you want to discuss, feel free to ask about those now. Let's get this back up and running. Okay. Okay. ALTT, it's a software. Okay, we'll take a look at that. All right, let's take a look at the P's. It's been a crazy market. A little bit of an opening gap reversal today. Again, it's up, it's down, it's up, it's down, it's up, it's down, it's up, and now it's going back down. This is a Jackie Mason type of market. I really don't have a prediction for you. I was asked earlier in the webinar, in the interview, whatever, the podcast, what's my prediction for 2025? I don't know. I have no idea. Okay, I'm a trend follower. Right now, we're kind of choppy. There's no trend to follow, so it's hard for me to get too excited about the market. Nasdaq Composite, kind of all over the place too. These indices, though, again, are fairly close to their all-time highs. Nasdaq's a little further away than I realized, 4% away from all-time highs, and the P's are, I think, 2.5% away. But notice that the moving averages are coming together. We could bow tie to the downside here fairly soon. We're not quite into bow tie proper order to the downside, but we are below the 50. Nothing magical about the 50, but it is a nice point of reference. And one thing I was looking at earlier today, again, last week in the webinar, right? Last week in Bandcamp, was if you take a look at the 50-week moving average in the Qs, which we use obviously for the TFM 10% system, notice that you can go all the way back to March of 23, okay? And it's possible, I mean, we'll see. I mean, I know it's been a little weak lately, or all over the place lately, but it's possible we could go a whole year without touching that 50-week moving average, and that would be fine with me. My little 100 shares might actually become worth something. Okay, let's take a look at the Rusty 2000. That's not the Rusty, but that's ugly too. Rusty's been all over the place. It's bow tied to the downside. It's cut through that 50 like butter. Watch the bow tie moving averages as they go through the 50. If they go on a sharp angle like this, that is no bueno. but we are bouncing off the 200. I would not rush out and trade this one way or the other. Put a gun to my head, which my wife hates when I say that, but put a gun to my head, it would be more of a short than anything. Now, what's kind of interesting is you have sectors that look like they're kind of rolling over in here like broker dealer, but then come back with a vengeance. Okay, so that's just the kind of market we're in, and I've been really reluctant to short. Although tonight I've got some decent looking shorts, potential shorts, and I might look at in the money puts on them just for S and G's. But I've been reluctant to short, and today makes me feel pretty good about not shorting, seeing some of these sectors just go straight back up. And the short side is a little tougher than the long side, so you've got to really pick your spots carefully and ideally catch the hold, the rollover. So infrastructure, you can see, just kind of melted up in here. This would have looked like a beautiful short, right? And then what's happening now? It's going straight back up. That's kind of par for the course when it comes to shorting. Software is looking kind of ugly. I think Keith's asking about a software stock. You can see we are in downtrend proper order, cutting through that 50 simple on a fairly sharp angle. So that's not good. And so far, just pulling back and stalling out a little bit. So that's bearish looking there. But who knows? Tomorrow, this might go straight up. So that's the kind of market we're in. Technically, as a trader, I should be shorting this particular market. I'm kind of holding on a little bit to see if we could get some improvement here. Insurance was imploding out of a pullback, okay? And now it's going straight back up. Still looks ugly. Long or short, this would be a short. But if you'd have gotten short on this beautiful little bow tie back here, whatever, provided you weren't able to take partial profits, you're now back below where you got in. And that's the short side sometimes. I do recommend learning to short though. One, it's the only way to make money in a bear market, obviously, for the most part. And two, it helps you to see both sides of the market. It keeps you from getting too bullish longer term. Semiconductors just stuck in this stupid sideways range. A little bit of an opening gap reversal today. That's a bit of a bummer. Up a bit. I mean, up a little bit. It's more a little bit, but still, looking at the chart, draw your lines. It's just sideways. Okay. Yeah, moving averages are improving, but always look at the chart. So that's kind of ugly there. So the point I'm getting to is it's just really mixed. The home builders have sold off hard so far, just pulling back. But then you got these big stupid gaps in here, right? Gaps against the trend, which is pretty obvious. But then, of course, the market's going to go right back up, squeeze everybody out, and then implode. Telecommunications has lost a lot of steam in here. This looks like a market that's kind of ripe to implode, although we did a big gap there just a day or two ago. The energies are coming back with a vengeance. And again, this looked like a short, although wide and loose, but more of a short than a long, I should say. But so far, it's going straight back up. And that's probably because oil has been doing pretty good today, notwithstanding, just banging out some multi-year highs, as you can see there. So just one or two more in here. Financials, okay? Another example of, okay, we're getting kind of bow tie-ish here. At the least, it's a first thrust down. Okay, your entry would have been right here. Yeah, this thing looks like it's going to implode. And again, if you weren't looking for, let's say, I guess in this case, a 2 or 3 point IPT, then you're hurt and pumped because it immediately just turned around and went straight back up. This is a market that I want to stay out of its way. I want to let everybody else fight it out. I think I said this, it might have been earlier, either in the, I've done so many presentations today, it's hard to keep up. Well, actually just 3, the trading service now, and then the interview. But Jesse Livermore said, when everybody's fighting it out, don't stress about not being in the market. They're laying the foundation, okay, for your next venture. And if you could be patient enough, then you could be kind of, and I know it's a little cliche, but it's like the Jimmy Rogers, I just wait until there's money lying in the corner, and all I do is walk over and pick it up. All right, opening up for stock picks, ALLT. Yeah, that looks good. I like this one a lot because it's a lot of communications. Now, we just looked at communications, and they're not doing so hot, but this could be a stock that's trading in lieu of them. I'd like to see some knockout. That's probably in the Landry 100, I would think. Yeah, I think, look, there it is right there, okay? I might personally have a small piece of this in this experiment that I've done, and believe me, it hasn't worked out spectacularly just yet. So, given the nature of the market, it's a bad time to mess around with some of the stuff, even in a small way. But you can see, yeah, that looks pretty good. You're gonna need you need like a TKO or some kind of pullback in here for me to get excited about that. Okay, any more? Going once, going twice. We're at impasse. Obviously, I want to thank everybody for watching. Anything unanswered, Landry.com. I likely won't do a show next week because it's a holiday week, and then we'll get back into the groove the following week, or consistent every week after that. But anyway, everybody have a great weekend. Everybody on Facebook, I'll see you there tomorrow morning. And of course, may the trend be with you. Thank you so much. You're welcome.